Understanding Keltner channels, a comprehensive guide to technical analysis. Keltner channels are a popular volatility-based indicator utilized in technical analysis to assist traders in identifying market trends and potential trading opportunities. First introduced in the 1960s by Chester Keltner, these channels consist of 3 lines that help traders visualize price movements and potential support and resistance levels. Key features of Keltner channels. Basic structure. The Keltner channel consists of 1. Middle line, an exponential moving average, EMA, of the asset's price, typically over 20 periods. 2. Upper band, set 2 times the average true range, ATR, above the EMA. 3. Lower band, set 2 times the ATR below the EMA. These bands expand or contract based on market volatility, as measured by the ATR. When the price breaks outside these bands, it can signal a continuation or reversal of the prevailing trend. Purpose and interpretation. Bullish signal. When the price touches or breaks above the upper band, it often indicates strong buying momentum and a bullish trend. Bearish signal. Conversely, touching or breaking below the lower band signals selling pressure and a bearish trend. Oscillation. Price movements within the bands can signify consolidation periods, where traders might consider the upper band as resistance and the lower band as support. The evolution of Keltner channels. Originally, Keltner channels employed simple moving averages, SMA, to calculate their boundaries. In the 1980s, the methodology shifted to utilize the average true range, ATR, which is now the standard approach. The ATR reflects market volatility more accurately, allowing traders to adapt the channels to changing market conditions. How to use Keltner channels in trading. Keltner channels can serve several purposes in a trader's toolkit. Identifying trend direction. Angle of the channel. The orientation of the Keltner channel provides insight into market trends. An upward sloping channel indicates a bullish trend, while a downward slope suggests a bearish trend. A flat or sideways channel indicates consolidation or indecisiveness in the market. Spotting price strength and weakness. Upper band breakout. A price movement above the upper band often confirms a strong bullish sentiment, especially in an upward angled channel. Lower band breakout. A drop below the lower band can indicate weakness in the asset, confirming that a downtrend may be in place. Trading opportunities. Momentum shifts. Continuous touches at the upper band without touching the lower band may hint at a potential pullback. Conversely, consistent hits on the lower band may signal that a bullish reversal is imminent. Buying and selling signals. Traders often buy near the lower band when the price shows signs of bouncing back and sell or short near the upper band when the price starts to fall again. Breakout indicator. Following a period of sideways movement, a breakout above the upper band or below the lower band, especially if the channel starts to slope in the breakout direction, can signal the start of a new trend. Calculating Keltner channels. To set up Keltner channels on your trading platform, follow these steps. 1. Calculate the exponential moving average, EMA. Typically using a 20-period EMA of the asset price. 2. Calculate the average true range, ATR. Generally using a 10 to 20-period ATR. 3. Calculate the Keltner channel. Middle line, EMA. Upper band, EMA plus 2 ATR. Lower band, EMA, 2 ATR. Formula recap. Plain text. Keltner channel middle line equals EMA. Keltner channel upper band equals EMA plus 2 ATR. Keltner channel lower band equals EMA, 2 ATR. Customization. Traders can personalize the parameters. EMA period. A longer EMA provides a smoother look but could lag in responding to market changes, while a shorter EMA reacts more quickly. ATR multiplier. Adjusting the multiplier for the ATR influences how wide the bands are, affecting how often price actions touch the bands. Conclusion. Keltner channels are a versatile tool in technical analysis, allowing traders to visualize market trends, volatility, and potential opportunities for buying and selling. As with any trading strategy, it is essential to use Keltner channels in conjunction with other indicators and strategies to enhance decision-making and risk management. Understanding how to calculate and adjust Keltner channels can empower traders to make informed decisions and navigate the complexities of financial markets efficiently.